So hello everyone, in this video we are going to see about capital budgeting. So what is capital budgeting? We want to know, right? So capital budgeting is before framing capital of that particular organization or a firm, we want to know about what are the capital expenditure and how much that particular capital expenditure cost and what how much it's needed for operating cost and so on, so that we can arrive the exact capital of that particular organization or a firm. Yes, we'll see what is capital budgeting as a definition. Capital budgeting and investment appraisal is the planning process. Is the planning process used to determine whether an organization long-term investment such as new machineries, replacement of machineries, new plants, new products, and research development project are worth of funding the cash through the firm capitalization structure. So if you take a capital of a particular company, it will consist of lot of things. There will be fund allocation for each thing like working capital, operating for how we want to take it for as an operating cost, carrying cost, the surplus amount, reserve amount, and how much cost it occurs for capital expenditure and so on. Lot and lot of things it gets involved. So the most important factor is capital expenditure. How much in order to set that particular uh, a manufacturing unit or a kind of thing. What are the machineries, manpowers and raw materials? What are the tools and equipments it's needed for the basic things or everything matters the last lot. So yes, this is what is all about capital budgeting. It speaks purely about uh, how much it has to cost based on the demand, how much revenue I am going to get. Based on that, how much I want to restrict my resources and everything, how I am going to meet out my demand with the minimal capital. That speaks about capital budget and capital budgeting process. Fine. So we'll see what is capital budgeting process. So capital budgeting process is it's a kind of cyclic or continuous process. We'll see in next slide what is it all about. So capital budgeting process is a company formal process used for evaluating potential expenditure. As I told, evaluating the potential uh, expenditure or investment that are significant in amount. It involves the decision making whether to invest in current fund or modify it for the replacement of fixed asset and so on for decision making. That's all about capital budgeting process. We'll see the flow how it works. So in capital budgeting process, what you want to see is first process or first step is to identify the new investment opportunities. If I am having you can see in two perspective, in the perspective of business, starting a business, and one more perspective is in the perspective of investment. Fine. Identifying new investment option means we'll see it in an investment perspective. If I am having a multiple option of investment like mutual fund, share market, other investment option like 4 to 5. First of all, what I want to do is what are the investment option I am having? I want to identify it. There is n number of investment options in India, so I have to identify those things. Next, in the perspective of a business, if I want to take, there is n number of industries and there is n number of sectors are there. Which is the highest and which is most needed in India? I want to analyze for which product the demand is more and what is very necessary for India. What products makes me to survey in this particular thing? I want to know about it. So based on the sector and industry, I want to identify what business I can start. So after identifying the new investment option in business as well as in the investment option, the next step is preparing cash flow and forecast the each project. If I am having like 5 investment option before me, like mutual fund, share market, and gold commodity like gold investment, and other two investment option like pension scheme, and some other like PPF, public provident fund. So if I am having that five option in my hand, if I am going to if I am having certain amount in my hand, if I am going to invest that particular amount in all the five investment, how much profit or how much interest or appreciation or a kind of interest I am getting out of it in a certain period of time, I want to analyze. So I have to prepare that. That's the thing. So if you take in the perception of business, how I will be taking is, I will be seeing like each year how much demand it will be. For that particular demand, how much revenue will be generated, how much capital I have spent for it, how much I am going to get it out of it. That's how I am going to cash flow, future cash flow as well as present cash flow. I want to determine for each year based on it. Fine. So after identifying the data or determining the data, what I want to, my next step is identifying the risk of that particular project. If I want to take in the perspective of investment, so mutual fund, share market, public provident fund, gold, and another one is pension scheme. Which is the more risky one? I want to analyze. If it is a share market or public provident, what is the more, which investment have more risk? Which is the safer side for me for my investment amount? Such thing I want to think about it. Similarly, if you take in the business perspective, if I am going to run if I am having many options like five business I want to start in cement industries or food restaurants and kind of FMCG and so on, based on the what are the internal like SWOT analysis as well as PEST, the external factors, what are the risks involved in the particular organization or a firm for running it. I want to identify the risk of the investment option as well as for in the perception of business. I want to identify the business risk. In the perspective of investment, I want to identify the investment risk. Once this three, first is I want to identify, second is I want to get the data from it, and I want to analyze the risk. Next is I want to apply this capital budgeting technique to come out with how much profitability or how much return or how much interest I am getting out of it, which is the best project or best investment or best business I want to identify. So as we seen in previous videos, I have given a capital budgeting technique. So budgeting as well as non-budgeting, sorry, discounting and non-discounting technique. And on that particular two, we have seen net present value, profitability index, average rate of return, and then payback period, and uh, we have seen internal rate of return, profitability index, and so on. So with that five analysis, we can come to know about which project or which investment or which business gives more profit out of it, based on irrespective of the risk what we have identified in the previous step. So once applying capital budgeting technique, we'll know about what kind of appreciation or interest or return we will get it out of it, or a kind of income. Next is implemented. What we want to do is, if I want to start that particular business, I want to implement it. If I want to invest in the particular investment option, I want to do it. If I want to do certain project, I want to implement it. And I should have certain period to analyze whether it's going right or not. I want to monitor my investment, whether I want to monitor my business, I want to monitor my project. It's based on 6 months or a year, periodically, or alternative months, or 2 years once. If it is a long term, year wise. If it is a mid term likewise, 3 months once. If it is a short term, for a week we have to monitor it. Once after monitoring, what we can do is, if it is performing well, that particular investment, then it's fine. If it is not performing well, once again what we want to do is, we have to come from step one and we have to do it continuously. If my business is going well, performing, then it's fine. Otherwise I want to go for the next one, or alternative things I want to look into it. This is called as capital budgeting process. So next is, this is the simplest capital budgeting process. First is identifying the what is the potential one, and evaluating the investment projects with the respective to investments, based on risk, based on applying the techniques and everything we want to look into it, evaluating the entire thing. Next is select at one. After doing the evaluation, you have to select among the 5, you have to select the one, and you have to implement it based on the performance monitor. You have to give the feedback, and otherwise you have to make it as a continuous process. This is what all about simple capital budgeting process. Fine. Yes, thank you all.